I think it begins with our own central bank, the Federal Reserve, which 4 years ago created excess liquidity, created excess money. That created global excess liquidity, started a commodities boom, and really destructively spilled over into the housing market, where everyone figured, why not let lending standards come down? Because after all, housing prices always go up, don't they? So that started it.
So there's a failure there, you would be prepared to admit, on the part of lenders. They were irresponsible, clearly. They picked up a ball that had been thrown there, if you like, by the Fed. But they were partly responsible as well.
Well, the Fed created the conditions for the bubble, and everyone participated in it. It wasn't just the banks and mortgage lenders, new players in the game. Wall Street got involved too. You saw the same thing happen around the world. Package these things, spread them all over the place, securitization. So it became a global mania, global bubble of a kind, sort of a global version of the tulip bulb mania.
A lot of critics of markets would say that the problem is that there was a lot of greed in there. Everyone wanted to put their long snouts in the trough, and this was what went wrong. And in order to get around this problem, we should not be so greedy, and we should rein in the markets. What do you think?
Well, human nature has not changed for thousands of years. The real question is, what were the conditions created to allow this thing to happen? One big one was the Federal Reserve. It had not had a weak dollar policy. The Bush administration had had a strong dollar policy. This never would have reached the proportions it did. We had two entities here, Freddie and Fannie. Fannie Mae and Freddie Mac helped fuel this thing, underwrote $1 trillion worth of less than prime mortgages. And then when the bubble burst a little over a year ago, government continued to make mistakes, including this arcane accounting principle called mark-to-market, which ended up destroying banks and insurance companies that were still cash flow positive. So there was a lot of mistakes made, and we, as you say, we got a mess on our hands.
Okay, well, how long is this mess going to last for, both in terms of the financial turmoil and in terms of the economic consequences?
Well, we're in recession. The U.S. is in recession. Europe's in recession. Obviously, growth rates in Asia are slowing down very, very markedly. So in that sense, I don't see an upturn until the spring, assuming we don't make more mistakes. On the financial side, I think, knock on wood, the worst is over, although there'll be some commercial loans that are going to go bad early next year, so the banks will take some hit there. But I think finally the right formula has been arrived at, which is pump in equity into these banks. We're doing it with 5% preferred. Over in the UK, they're actually taking some big equity positions. But you got to pump in that equity so that banks can start lending again and stop hoarding cash the way people hoard food in a famine.